Hello, everyone across the internet. This is James with another stock update on Bed Bath & Beyond. Everybody's favorite crazy short sale slash comeback slash get smaller and get profitable company. A couple of quick observations. They just raised another $360 million in equity. If they can just do that 8 times, they can pay off all of their debt. Wouldn't that be neat? And they might be able to get to the right number of stores to continue this business instead of bankruptcy court. One thing I wanted to make about this video is their balance sheet. Number one, the observation quarter over quarter over quarter. The assets seem to be going down just a hair. I think this is when you have 1,000 stores like they did, and now you only have 360 stores. You've closed 640 stores. They have an absolute shit ton of inventory. They have inventory from all of these other stores. All of this inventory is assets. You can see starting in 2020, 7.79 billion down to 6.46 billion. As they killed these assets, they were able to pay off some liabilities. Going into the next year, they pounded off some assets again, and they very slightly reduced their liabilities. Would have been nice if they would have chewed into that like they chewed into it here. The point of this video is to show you that yes, they do have $4.96 billion in liabilities. They have $5 billion in assets. Obviously, they're not going to be able to support these liabilities as a smaller company. But are they going to need to is going to be determined by their ability in the good stores that they have left. Let's hope they're good. Let's hope they're right side up. They can move these assets, empty that warehouse, not have to order from vendors like they used to. 80-90% of all of the money in their collected in their stores going straight into the till and not going back out to the vendor. They are sitting on triple the inventory that they would probably need. Can they bring this number down to $1 billion? You're going to have $1 billion in assets, $1 billion in inventory, or a couple of billion. Will that bring their debt down a couple of billion with it? Can this company with $5 billion in liabilities become a company with $2 billion in liabilities, with $1 billion in liabilities? They're still open. They still have 360 stores churning out merchandise as quickly as possible. Year over year over year, you see the assets falling. You'd like to see less bad things happening. They just had to close a bunch more stores. That probably costed them a fortune. I don't know where the future's headed. I can see these numbers coming down together naturally as the sell-off progresses, as they move more and more. They have stacks of towels out the wazoo, stacks of everything out the wazoo. This company has more merchandise than they have brains in their head. But if the next quarter we see the double decline again, this company could ultimately reach maybe a 2 in assets, 2 in liabilities level at some point, in theory. I realize they're losing money hand over fist. They're supposed to lose $1.99 on their earnings report, which is coming out on April 11th. Is their next earnings report. It's Q4 of 2022 data. The forecast is a loss of $1.99 per share, which is horrible. Last year they lost 92 cents in the fourth quarter. And let's see what that was exactly, what their fourth quarter looked like. Not their balance sheet, their income statement. 1, 2, 3, 4. Yeah, well, it was a big one. It was when the company was probably kicking ass still. So it'll be a big year-over-year disappointment, obviously. and earn money. Yeah, we're comparing good times to bad times here. Let me make sure I was on an annual chart. I mean, a quarterly chart. No, we got to go back. Yeah, we're going back to February of 2022. That was like their best quarter of the last year. They lost the least amount of money. Um, it's going to get worse than that, obviously. But it's also going to get twice as good as last quarter so far as their money lost. Instead of losing 400 million for the quarter, maybe they lose 200 million for the quarter. So the losses could be diminishing themselves. They just got injected with a ton of cash. I highly recommend they use that cash to pay off these liabilities, because you know some of this crap's not going to sell, or they're going to have to discount it to sell it. Only keep open the profitable stores, pay off your debt, liquidate the inventory. You might just walk out of this thing. It's very possible. Do another public offering. If the Reddit people want to get down with it, if they want to buy, let them. Let them buy like crazy. Let them liquidate this company further. Let them keep 200 or 300 stores open if they want to. I don't know what it's going to do to the stock price with all that dilution. It's probably going to go to hell in a handbasket. The shorts are probably going to love it. But that's okay if they love it. Let's keep Bed Bath & Beyond in business. Let's give them a hope. And they made some bad decisions along the way. Maybe they can reverse some of those. Anyhow, just another update, a way to look at Bed Bath & Beyond. Is this company savable? I think yes, it is. I think that they have an army of millions of investors behind them that are ready to throw their money at this any way they can. Instead of driving it up to $500 a share, which was what their goal was, they were going to spend, hundreds and hundreds of billions of dollars on this thing. It seems like they'd be more than down for any public offering. I say the public loves it so much, and it's such a Wall Street darling, they get what they need. They survive. They end up a 150 to 200 store chain. Their website continues to do almost $1 billion every year in revenue. It might just turn into a web business. That's another option for it. Just shut down the brick and mortar if it's not working. But if it's working, you're making money. So make your decision. Is it working or is it not working? And go from there. Hopefully we'll see some responsibility. Hopefully we'll see continued investment. I guess they don't have any credit. Hopefully they can sell off the 2-year-old merchandise that they still have sitting around from all of the other stores, which equates for all of their liabilities. And they have hopefully good stores to move it, and hopefully they are not ordering anything new. So did this thing turn around based on all of that? Yeah, maybe. We'll see. I guess that all that, even though you don't have a cost of a product, you still have to send the money because the product cost you one day and you bought it on credit, like a dummy. But at least you can pay off the credit, you can liquidate the item, you can get it off your balance sheet, you can become a leaner company. People might just like you again one day. Maybe one day you'll go out and open up another store. But that won't be for a while. But Operation 1 is 200 to 300 stores in business, healthy website, healthy balance sheet. Come on, let's get it together, guys. bbby, hoping for the best. Please like my video and subscribe to my channel, and I'll bring you some more updates on your favorite, soon to be maybe not, hopefully, penny stock. Thank you very much for watching.